notes. So they want us to do some notes. They want us to do a statement of financial position. So these are the things that we're going to focus on. We have 1.1 here where they're saying complete each of the following statements by choosing a word from the list below, right? Write only the words next to the question number 1.1.1 to 1.1.3 in the answer book. I think this is one of the things that are very easy, and they want us to collect some free marks here. So we're going to focus on 1.1 for now. We have external auditors as part of our options. We have directors. What are external auditors according to your understanding?
External auditors are auditors that the company hires from a different external auditing company to check if the internal auditors or the financial statements are done properly.
Exactly. Those external auditors, we're talking about an independent company. Exactly. Those are independent auditors that come and examine the financial statements of the company to check if they're accurate, they're valid, and they're complete, right? And to check whether they comply with the applicable laws and regulations, to check if they comply with the international financial reporting standards. You have heard about IFRS, which is International Financial Reporting Standards. Okay, what is directors?
Directors are employed by the shareholders to do the daily operations of the business.
To do the daily operations of the business, no? Those are directors to manage the company on a day-to-day basis. But we have executive directors and we have non-executive directors. Executive directors, we know they're working on the company on a daily basis, managing the operations of the company. But when it comes to non-executives, those ones are not involved on the daily operations of the company. What about shareholders? You know the shareholders, right?
Yeah, shareholders are owners of the company.
They are owners of the company. Very good. And then internal auditors?
Internal auditors are the auditors the business has hired to do their financial statements.
Not really to prepare the financial statements. They're still doing the same thing. You correct by saying those are auditors that have been hired by the company. They're working for us, right? They're not like external auditors. External auditors, they're not working for the company, but they are hired to come independently and examine. They're hired by the shareholders actually to come and examine the financial matters of the company or the financial records. But when it comes to internal auditors, those ones are hired by directors, right? They're working for us as a company. They're working internally. Why? What are they doing? They actually like implementing the internal controls, right? They're suggesting the internal controls that will help the company to limit the level of errors that are occurring in the financial system. They implementing proper internal controls to prevent fraud. So they are actually also performing an audit before external auditors come. Internal auditors, they need to audit those financial statements to ensure that everything is in order before the external auditors come into the work. So they also there to guide the company, to advise the company on how to do things correctly, or what are the external auditors will be looking for. They notify the company before external auditors come. It's like, you see, they just making them to be aware of those few things that they need to be aware with before the external auditors they come, because these ones, once they come, it will be a problem, obviously, because whatever that they're finding to be incorrect in that company, it's going to be an issue, right? It's going to be an issue. So that's how it works. But thanks, I can see your understanding on this one, which is good. 1.1.1, what is happening here? They're saying here, then we have dash here, are employed by the company to set up and monitor control processes, right? To set up and monitor control processes. Who are those? that are employed to set up and monitor the control processes?
Internal auditors.
Exactly. We're talking about internal auditors here. They are there. You see, they set up internal controls and they monitor the internal control processes. That's the only thing they do. They're not like preparing financial statements. Who directors are responsible to prepare the financial statements, but internal auditors, they review those financial statements. They set up internal controls and they monitor those internal controls. For example, you know, whenever, let's say if we buy something in a business, right? There will be a slip, right? Or there will be an invoice. That is a document that needs to be reviewed before it is recorded in the financial statements. In a transaction is recorded. So who is telling us to review whatever that needs to be reviewed before it is being recorded? Those are internal auditors. So 1.1.1, we're supposed to have internal auditors here, which is correct. Thank you on that. And then when it comes to 1.1.2 dash are appointed to give an unbiased opinion on the financial statements. Who are those?
External auditors.
Exactly, these are external auditors. We hire them so that they can do what? So that they can examine the financial statements and then provide us with external auditors. External auditors. So they just there to provide us with the opinion on whether the financial statements present fairly or not. 1.1.3 dash are appointed by the owners of the company to perform key management functions. Who are those?
Directors.
Exactly. They just come to perform the key management function. They're managing the company. So we have directors. Okay. That is question 1. That is our question 1, 1.1, 1.1.1 until 1.1.3. Then now we go to 1.2. Now we go to 1.2, which is now Prudence Limited. That's the company that we're going to work with. Okay, here we have 1.1.3. Here is 1.1.2, and then this one is 1.1.3. So for 1.2, we're going to work with Prudence Limited. Okay, so this is the company that we are going to work with for now. Okay. So let's see what they want here. They think here the information related to the financial year ended 28 February 2022 required. So what we're required to do here, we are required to complete the following notes to the statement of financial position, which is a balance sheet. Ordinary share capital. They want us to do ordinary share capital, and then they want us to do what? Retained income. So these are the 2 notes that they want us to do. Then after that, we need to prepare the statement of financial position, which is a balance sheet on 28 February 2022. The reason why they call it a statement of financial position, now it has been changed. It is no longer a balance sheet, but because in high school, we're still using the term balance sheet, they're still keeping it here. But in university, you'll find out that they call it a statement of financial position one way. We're no longer using this term of balance sheet. It is an old terminology and it has been eliminated now. We're no longer using it. Okay. Information. So let's see the information that they've provided us with. The starting point, we're going to do our ordinary share capital. So ordinary share capital is note number 7. Ordinary share capital is note number 7. So that's the one that we're going to ordinary share capital. We're going to start with this one, and then there is also note number 8 that we're going to do, which is note for retained income. So they want us to do these 2 notes for now. Okay, so what is happening? Ordinary share capital, I need to have authorized. Am I right on this? We must have authorized share capital. We need to know how many shares are authorized. And then what is our format saying? And on our format, we're going to have something like the number of shares that are issued at the beginning, right? Issued at the beginning, which is that is an opening balance where at how much we need to know those shares were issued at how much. And then we're going to have another shares that were issued during the year, right? Issued during the year. And then we need to know they were issued at how much. And then we're going to have shares bought back. Am I right on that? We're also going to have shares that were bought back. It's something that is possible that we do have, or the shares that were repurchased. Okay, shares repurchased, and then we need to know they were repurchased at how much. Those are the things that we need to consider. And then we're going to have shares issued at the end, right? And after that, we're going to have the number of shares that were issued at the end, and that's what we're going to have here. That's what we are going to have here. Okay, so I want us to go to the information shares issued at the end of the year. Okay, we don't know how much are those shares. Then we need to check what is the format for retained income. Retained income, we're going to have opening balance also, which is going to be a balance. Obviously, we need to check when is our accounting period starting and when is it ending. This information relates to the financial year ending 28 February 2022. So if it ends on the 28th of February 2022, when is it starting?
First March 2021.
1st of March 2021. Very good on that. So it's going to be 1 March 2021. Okay. So this will be our accounting period. 1 March 2021. That's when the year is starting. Okay, that's when our year is starting. So which means now here I'm going to have a balance on 1 March 2021. Okay. And then after that, after the balance, we know very well that we need to have something called net profit after tax, right? Net profit after tax. After the net profit after tax, we're going to have what? The shares bought back, which is the shares repurchased, right? Now shares repurchased. If we bought back shares, it is going to affect the retained income. Still remember the amount we spoke about on that other day. We said the extra amount, the difference is the one that will go to the retained income. You remember that we said if we issued shares at 50,000 and we buy them back at 60,000, the difference of 10,000 will go to retained income. Okay, and then the next one will be dividends on ordinary shares. Dividends on ordinary shares. And then those dividends we're going to have what? Interim dividends first, right? Interim dividends first. What are interim dividends? Based on your understanding.
Dividends paid during the financial year.
Exactly. Very good. Dividends that were paid during the financial year, which means in the middle, usually we pay those dividends in the middle of the year, and then we know that we're done with those dividends. So we're going to have a balance here, which is going to be 28 February 2022, right? 2022. Okay. And then we're done with our format. Then now we can start going through it and see if we can do these two notes and finalize them. Okay, let's go to our information now. The information provided to us They're saying here, extracts from the accounting records, 28 February, balance sheet account, they gave us amounts for 2022, they gave us amounts for 2021. Fixed deposits, they gave us 489,000 rands. We can see ordinary share capital, they gave us an ordinary share capital of 7,054,000. You can see that this is an ordinary share capital at the end of the year. At the beginning, they did not give us, they gave us a question mark. So which means now we show that we do have 7,954,000 as part of what? This is our share capital at the end of the year, 7,954,000 rand, 7,954,000 rand. That's what we have at the moment. Okay, retained income, they gave us the balance at the end as well on the retained income, which is 1,196,000. I'm going to have 1,196,000 rands here. Okay. And then we carry on loans. They didn't give us anything on the loan. SARS income tax, they gave us a provisional tax of 450,000 rands. Usually we're saying this amount, we have to compare it first. We have to compare this amount with the income tax for the year, which is an expense, and then we check. Because if it's like this is a debit amount, these are provisional tax, which means SARS is owing us here. Then if we calculate the tax expense for the year, we're gonna use it against this and see whether it becomes a receivable or a liability at the end. Okay, creditors control. We will come back to this one. We're just going to skip this one on creditors control, 617,450. Where is creditors control supposed to go? Creditors control is supposed to go to our trade and other payables, right? 617,450. Okay, let me just close this space here because I also want us to put this amount on the balance sheet. So this is our balance sheet. This is the formats that we have. So on our trade and other payables, I'm going to have how much? I'm going to have 617,450. Let's put it here. 617,450. This is our trade and other payables. And then shoulders for dividends. These are final dividends. Are you aware of that? Then they gave us at the beginning, they're giving us at the end. 213,400. This is shoulders for dividends. It has to go to our creditors, right? It has to go to our current liabilities as well, shoulders for dividends. And we know very well that these are final shoulders for dividends. 213,400 rands. 213,400 rands. Another thing that we should be aware of, Kinelo, is that shoulders for dividends at the end of the year is the same as what? As the final dividend. Am I right on that?
Yeah.
Shoulders for dividends.
One in retained income.
Yes, the final dividends that will sit in retained income. So which means if I come here to these final dividends that we can see here, these final dividends that are there, they are the same as what? They are the same as the shoulders for dividends. Am I right?
So would the one for 2021 be the interim dividends for the shareholders for dividends under 2021? Would it be the interim dividends?
Not really.
Oh, okay.
Not really. These were final dividends. These were final dividends for previous year. These are final dividends for current year. Yes, they're not really an interim dividends. But
that was what's confusing me.
Yeah, I understand. We need to work on that more because when you go to cash flow statements, you will need to understand that principle more because like the interim dividends, most of the time you'll find it's the one that will be on the trial balance. But since this is a shoulders for dividends, this is shoulders for dividends at the end. It becomes a liability, which will go to current liabilities in the balance sheet, but also on the note to no, so on note number 8 for retained income, this 213,400 will be a final dividends. Yeah? We will still work on that. This thing of interim dividends, you will also have to understand it. When we do cash flow more, because it will go there as dividends paid, you will see how we get it there. Okay, debtors control, 875,000 rands. This will go to our balance sheet. 875,000 rand is what? It will go there as my current asset. Okay, so I'll come here and say trading order receivable, 875,000. Okay, 875,000 rands. That is my debtors control. Okay, so we've dealt with all of these amounts. We are sorted with these ones. Okay, these ones are just gonna remove this because we're still gonna come back. And then fixed deposit. For fixed deposit, 489,000 we didn't take to our balance sheet. Let's put it here. Investment fixed deposit. I'm going to have how much? 489,000 here. Okay. That was fixed deposit. Ordinary share capital. They gave us these ordinary share capital. We can see which these are the closing balances, right? Which means they can also go to the balance sheet. 7,954,000 can come here. 7,954,000 rands, because these are ordinary share capital at the end, and then this is retained income at the end. 1,196,000 can also go to my balance sheet. 1,196,000 rand. So which means now I can get a total of my shareholders' equity, and then I'm sorted with that one. And then after that, okay, loan, we didn't have loan, we passed to this one. So these three, we've dealt with them and we're happy. We moved on. Loan, we don't have loan. Okay, provision for bad debt. We have 23,640. They gave us at the beginning, but at the end, they didn't give us. So we need to know, this one, definitely we subtract it from debtors control. Am I right on that? 23,640. So we have to subtract it here. 23,640. But you remember that we're still gonna apply whether we have to adjust it to 5% or whether it increase, or if it increase, we're gonna add something on it.
Yeah.
If it increase, we're gonna add something on it. If this 23,640, because this is the balance at the beginning, they can tell us whether it has to be increased or it has to be decreased. We don't know, but we'll see when we look at the transaction. But for now, I'm just gonna subtract this one, then we'll see as time goes on in the transaction. And then trading stock, balancing figure. Okay, they didn't give us this amount, so it will be a balancing figure. We will see when we deal with that. Okay, and then we have petty cash of 5,000. And this is part of my cash and cash equivalents. I need to go there and say, under cash and cash equivalents, I need to have petty cash of 5,000. I'm gonna record it here. And then what else do we have? Petty cash, we've dealt with it. Bank overdraft, balancing figure. What is a bank overdraft? Bank overdraft, you can see here, there's a lot of balancing figures that we need to deal with. Bank overdraft, it has to go to my current liabilities. As you can see here, there is bank overdraft, but we don't have money for it. We will have to check it. It's going to be a balancing figure. Then we have audit fees. These are nominal account section. They don't really go to the balance sheet, but we will never know in terms of the accruals. Rent income, 48,102,400. And then we go to number B. They're telling us here about share capital and dividends. This is what we need to deal with. On 1 March 2021, they're saying here 75% of the authorized share capital of 1,200,000 ordinary shares were in issue, which means this is at the beginning. 75% of the authorized share capital. So now we know that 1,200,000, these are authorized shares, right? So I can go to my note and say authorized, I can say 1,200,000, and then I say ordinary shares, right? Ordinary shares. These are the shares that were authorized. Then they're saying 75% of the authorized share capital of 1,200,000 ordinary shares were in issue. So how many shares were issued at the beginning then? If they say 75% of 1.2, how much are you going to get?
900,000.
900,000 rands, exactly. 900,000 rands. These are these will be the shares that are issued at the beginning. So here I'm going to have what shares issued at the beginning. I'm going to have 900,000 rands, and I will say these are the shares that were issued at the beginning. Okay. Then we sorted, but do we have the amount for it? They didn't say anything about that. So we're going to move on. We're going to move on and see the next one. What is the next one saying? So if you don't have something, you don't have to stress yourself, just move on. 30 August 2021, what happens here? 80,000 shares were repurchased from a retired shareholder. So we bought back 80,000 shares. So I know very well that on my format here, you can see issued during the year, and then we have shares repurchased. So these ones, we issued shares first before we bought back something. So no, sorry. We bought back shares before we issued them, before we issued another one. So I need to have shares repurchased here. So we repurchased how many shares? 80,000 shares. Okay, I'm gonna put it in the brackets, 80,000 shares these are shares that were repurchased. Okay, let's carry on with our transaction. He was paid 20%, that is 136,000 above the average share price and will no longer qualify for dividends. So which means how much will that amount be? If 20% above was paid, and that 20% above equal to 136,000. So which means how we're going to calculate that one?
Probably using the UK method. So you would say 136,000 times 80% over 20%.
Okay.
And then you get 544,000.
544,000. Why are we saying 80? Is it not supposed to be 100% that one? It was 100% before, and then 20% extra was paid. So they saying here he was paid 20% above. So which means now everything will always be at 100%. Then when you say 20% above, it's like when you say 8 times 8 over 20, it's like now it was 20% before, and then they added to it was short. Then if it's like that, it was 100 before, and then we added 20%. So your formula needs to change a little bit now. So what are you gonna say now? Instead of 80, you're gonna say 100 over 20. Does it make sense now?
Yeah, it makes sense because it's 20% above, not part of the, yeah, it makes sense.
Exactly. So which means now they saying here 80,000 shares were repurchased from a retired shareholder. He was paid 20% above the average share price and will no longer qualify for dividends. So which means now when they say 20% above, which means these shares were repurchased, he was paid 20% above, which is like 100 sentences above the average price. So which means the average price here will be how much? We said it's going to be 100 over 20. And how much you getting there?
680,000.
680,000, which means this is the average. This is the average price of 680,000. Am I right on that? 680,000 should be an average price. How did we calculate this one? We said 136,000 times
100 over 20.
20 years. And we know that this is an average price. Okay. Average price. We know very well that all the time shares repurchased, they must be repurchased at an average price. What is an average price? Average price, this is an average price of all the shares that have been issued before. But because we only have issued shares once, these are the shares that have been issued at the beginning. So the average price will have to be the same as these shares. Am I right on that?
Yeah.
So how much would that be average price in terms of like average price per share?
Okay, hold on. It would be R8.50.
R8.50, yes, because we're saying 680,000 divided by 80,000 rands, né? So we're going to have R8.50. This will be my average. This will be my average price, which means now at the beginning I can now get the price, which will still be the same. Am I right on that?
Yeah.
You follow why we're saying it will still be the same, because these are the only shares we can calculate an average from. Otherwise, there is no other shares that were issued after 900,000. After 900,000, we bought back shares. So we can only calculate an average from this 900,000. So we are sure of that this R8.50 as an average price will be the same as this average price, because that's how we calculate it. But in this scenario, we didn't have to calculate that way because they gave us this information. So how much would be our shares issued at the beginning in terms of the rand value now?
7,650,000 rands.
7,650,000 rands, yes. 7,650,000 rands. So which means these are the shares that were issued at the beginning. So can we carry on now with our information?
Yeah.
31 August 2021, an interim dividend of 28 cents per share was paid. So we know very well that we have paid an interim dividend on the 31st of August. Interim dividends were paid. So what's going to happen now? And they told us here that we will no longer qualify for dividends. So on how many shares will qualify for dividends now if we remove 80,000? Because initially it was 900, then we bought back 80. So how many shares are left? How many shares are left for us to calculate our interim dividends?
Pardon?
Yes, come again.
Can you please go back to the transaction?
Yeah, let's go back to the transaction. You see here, they're saying here, an interim dividend of 28 cents per share was paid on the 31st of August, right? On the 31st of August, just a day after we bought back the shares. A day after we bought back the shares. And look what they said here. He was paid 20% above the average share price and will no longer qualify for dividends. So which means now this 80,000 is no longer qualifying for dividends. From the shares that were issued at the beginning, which was 900,000 that was issued at the beginning, we know that we need to remove this 80,000. This 80,000 no longer qualifies for dividends. So how many shares will be left with that will qualify for interim dividends?
820,000.
We're going to be left with 820,000. So which means now on my workings for interim dividends, I'll say 820,000 and say multiplied by how many cents we paid for interim dividends. That was 28 cents. Né? So if we multiply by 28 cents, how much we'll be getting?
Um, 229,600.
229,600. Thank you on that. So that is our interim dividends, right? That is our interim dividend. So which means now my total dividends on ordinary shares I'm gonna get these two right now. I'm gonna get these. I'm gonna get these two. So which means now I'm having this. Okay. Let me just do it like this. Which is going to be how much now? 443,000. This is our interim dividends in total. 443,000. Okay, let me do it like this. Yes, do it like this. 443,000. This is our interim dividends, right? Then what is the next now? Now we need to check the next transaction. They're saying here 1 December 2021. This is the next date that we have. 1 December 2021. This is our next date. They're saying an additional 150,000 shares were issued. An additional 150,000 shares were issued. So which means now on my ordinary share capital note, I'm going to have an additional shares of 150,000. So I need to come here and say 150,000 shares were issued, right? But at how much, we don't know, but we can get the price for that. Can we not get it? We can get it now, né? Can we not get a price for this one, Kinelwe?
What do you say? Thank you. I got 984,000 rands.
984,000 rands, right? So what is our formula for that? We're taking that 7,954,000, né?
Mm-hmm.
And then what do I do? What am I adding? What am I subtracting?
You're adding 680,000, and then you
680,000.
subtract.
Yes.
7,650,000.
Exactly. And then how much am I getting?
984,000.
984,000. Very good. So that is going to be my shares that were issued during the year. Then at the end of the year, how many shares are in issue at the end of the year?
970,000 shares were in issue at the end of the year.
970, exactly. 970,000 shares are in issue at the end of the year. So can you follow this? Can you see how this one works? Yeah?
Mm-hmm.
Okay, so this is your full. I think the note is complete now. If it's like this, our share capital note, the note is complete. I don't think we need anything else. Then we can carry on with our information. Additional, and then 20th February final dividends was declared. We do have those final dividends. We've already considered them. We know them with how much of those dividends were declared. Okay, then number C, income tax for the year after taking into account all adjustments amounted to 438,000. This is 30% of the net profit. Okay, so which means now I do have the income tax now for the year, 438,000. Initially we said, how much did we have there? We had SARS was owing us 450. and then we incurring 438. Who is owing the other now? SARS owing us, or we owing them?
SARS owes us.
SARS owes us, yes. How much? 450 minus 438. 450,000 minus 438,000 that we have here. So how much is SARS owing us?
SARS owes us 12,000.
Exactly, 12,000. So the 12,000 rands, where is it supposed to go? Trade and other receivables or trade and other payables?
Trade and other receivables.
Trade and other receivables. Okay, so we're going to have 12,000 there as part of what? As part of my trade and other receivables. I'm going to show my 12,000 there. Where is it? Trade and other receivables. Let's go to our balance sheet. So we're going to say plus 12,000 rands. Okay, so we can carry on. This is 30% of the net profit. So can we not calculate the net profit here because we need it for retained income? Am I right on that? We need. So how are we going to get the profits now if we're saying 30% of the net profits, this one?
We're going to say 438,000 times 70% over 30%.
Very good. 438 times 70 over 30, because the net profit after tax would be 70. But if I needed net profit before tax, I was going to say hundreds, né?
Yeah.
Because before tax it's always hundreds, and then we subtract the 30%, then we get 70. So I'm going to say 438,000 multiplied by, and then I say multiply by 70 over 30 years. And then how much are we getting?
1,022,000.
1,022,000 rands. 1,022,000 rands. Okay. And then we carry on. Now we're going to information number D. They're saying here the following adjustments. They're saying here the following adjustments are relevant to complete the statement of financial position. So for us to complete the statement of financial position, we need these adjustments. Okay. The provision for bad debts must be increased by 2,610. So what do we do with this one?
Increased, we'll add to trade and other payables.
Trade and other payables, why would we?
No. We're gonna add to trade and other receivables.
Yes, so on this 23,640, we subtracted this one already. So we need to subtract that 2,000 more, né?
Yeah.
So 2,610, we must carry on and subtract it here. Even before that 12,000, I can just say minus plus here. I can just say plus this 2,000, né? Or as let's just add it to this 23,640. If I say 2,610 plus, and then I take that 23,640, how much will I get? 26,250 that I'm getting. So it's actually 26,250 that we needed to subtract here. Am I right?
Yeah.
Okay, then we're done. We know we're done with this provision for bad debts. And then they're saying here only half the audit fees were paid. The balance will be paid in March 2022, which means this March 2022 is after year end. So the audit fees that were paid, we only paid half. How much were those audit fees? Let's go and see. Audit fees that we have here were 48,000. Only half was paid. So how much is remaining outstanding?
We still owe 48,000.
Yes, is that what liability or receivable or asset?
Liability.
It's going to be a liability. Yes, it goes to note number 9. You remember that, né?
Yeah.
Yes, it's going to be an accrued expense there. Am I right? So I'm going to add it as part of my trade and other payables. How much I'm going to add there? I'm going to add 48,000.
Yeah.
Okay, let's go and carry on and see what is next. The tenant occupies part of the premises from 1 May 2021. He has not paid the rent for January and February 2022. I want you to read this transaction and work on it for me and tell me how we're going to deal with it.
Can you go to the trial balance, please?
Yes. There is rent there, 102,400. Just tell me when you want me to go to the transaction now.
May you please go to the transaction?
Yes, there is a transaction there.
You're gonna divide the 102,400 by 8 months.
Exactly. We divide it by 8, and then what do we do after that?
Because they haven't paid for 2 months, we're going to say 12,800 times 2, and then we're going to add it into the trade and other receivables.
Very good, Kinelwe. 12,800 multiplied by 2, how much we getting?
25,600.
25,600. Very good. That's how we deal with the transaction. This is an accrued income, eh?
Yes.
Perfect. Let's go to number E now. Number E, 240,000 of the fixed deposit will mature on 1 April 2022. When is 1 April 2022? Is it outside our accounting period or within our accounting period?
It's outside of the financial period.
Exactly. We have March and then we have April. So, but we know very well there's a fixed deposit that we have in our books. 240,000 of the fixed deposit will mature. It's like a current portion of loan, this thing, né? It's like a current portion of loan. So it has to be moved from a non-current. It goes to current assets. This one, it has to be moved from non-current assets and it has to go to current assets. Just like a current portion of loan, it is moved from non-current liabilities to current liabilities. So which means from our fixed deposits that we have in our balance sheet, let's go and see the fixed deposits that we have there, how much we had 489,000. So I need to say minus 240, right? Am I right if I subtract 240,000 there? Because this thing is going to mature within the next 2 months. Can you see? Within the next 2 months, which means next 2 months is less than 12 because it matures in April. So which means now we're going to receive it within the next 2 months. It is no longer non-current asset in terms of like nature. This thing is no longer a non-current asset. It now becomes a current asset because I'm going to receive it within the next 2 months. The only thing that becomes non-current in nature, Kinelwe, is anything that I'm going to receive after 12 months from the end of the year. So since this one from February, I'm only counting 2 months, then I'm receiving this, fixed deposit. It is no longer non-current in nature. That's why I need to come here to my non-current assets and subtract from the investment, subtract 240,000. Then I need to take it to my current asset. Where is it going to sit here in the current asset?
Trade and other receivables.
not really trade and other receivables, but it will sit as cash and cash equivalents. Because remember, a fixed deposit is the money that is kept in the bank, right? So it is still in the bank. So it will be a cash and cash equivalent as money that is sitting in my bank account that I'll get within the next 2 months. You see, there's no difference between fixed deposit, and what and cash and cash equivalents. Under cash and cash equivalents, you remember it's under cash and cash equivalents, we have bank there, right? Fixed deposit and bank, this is the same thing, Kinelo. This is the same thing. Bank, we're talking about cash in the bank, right? Am I right on this one? This cash and cash equivalents. We have bank there, which is cash in the bank, because under cash and cash equivalents, you remember that we have bank, we have cash float, we have petty cash. Ne? Yes. So now this is the bank. This bank with it means cash in the bank. Then what about fixed deposit? Fixed deposit is still a cash in the bank, right? It's still a cash in the bank. But what is the difference between the two? This one will be received after 12 months, right? Will be received after 12 months, right? After 12 months from year end, right? From year end. This one will be received after 12 months from year end. This one can be received within 12 months, can be received within 12 months. But it doesn't change that both of these amounts, these are the amounts that are sitting in the bank, both of them. So now under fixed deposit, when I find out that there's 2,000 that is sitting there that I'm going to receive in the next 2 months, I need to move that 2,000 and subtract it here and add it here, right? I need to subtract it there, it's going to be negative, and then I add it here, it's going to be positive here, because it doesn't change that these are the amounts, both of them, they're sitting in the bank. When you make a fixed deposit now, you're going to go to the bank and tell them to keep your money for 3 years. That is a fixed deposit. But if you're saying they must keep it for 3 months, that's not a fixed deposit. That is just a cash in the bank. That is a saving for you, because you're going to take it within the 12 months. Before like it even reaches 12 months, you're going to withdraw your money. So that's why here we're subtracting the 240 and then we're adding it here. This one is like a non-current portion of loan. This is a current portion of loan. Same thing in principle. Yes, same thing in principle. So, and then we can go and carry on now. Where we are now. A debit balance of 17,050 from debtor's ledger must be transferred to a creditor's ledger. How do we deal with this transaction?
You're going to subtract it from trade and other receivables first, and then you're going to add it onto trade and other payables.
Why am I adding it there? Why do I have to add it there?
Wait, can you go back to the transaction?
Okay, please read it again.
You added to trade and other payables because they're now a creditor.
Not really. Yes, in principle it's like that, but you remember we did this transaction in the previous question. What we said there, we're saying we said we subtract here, we subtract it here as well in both sides. Minus 17,950. You still remember why we said that? Because there was a journal that I spoke about. We said a debit balance of 17,950 from debtor's ledger must be transferred to creditor's ledger. So if I'm taking something out of my debtor's ledger, so I need to credit my accounts receivable, I need to credit my trade and other receivable. So I'm going to say credit, trade, and other receivables, right? So if I'm crediting my trade and other receivables, which means my receivables are decreasing if I'm crediting them, then what am I going to debit? I'm going to debit trade and other payables, of which still trade and other payables are decreasing as well. So both of them, they decreasing. So that's why I'm saying minus under debtors, and then I say minus under trade and other payables, because a debit, if I'm debiting trade and other payables, this is a liability account where liabilities are decreasing on a liabilities are decreasing on a debit side. Am I right on that? Do you still remember the accounting equation? Because we have something like let me see. Let me just do this debit, and then I say credit. Debit, and I say credit. Okay. Then I'm gonna say asset. I'm gonna say liabilities. Okay, let me just say expenses. And I say income. I say liabilities. And then I do this. I want us to talk about something here which is very important. I want us to talk about something which is very, very important. Okay. Asset. Which side are they increasing? Which side are they decreasing? Debit or credit?
Increase on the debit side.
Assets, they increase on the debit side, eh?
Yeah.
And then they're decreasing on a
credit side.
On a credit side, okay. Expenses, which side?
Increase on the credit side and decrease on the debit side.
Expenses decrease on the debit side. You're saying this is what you're saying, eh? Were you saying like this or the other way around?
I think it's the other way around.
Exactly, it's the other way around.
Yeah.
It's the other way around. It's the other way around. Then income?
Increase on the credit side and decrease on the debit side.
Minus on the debit side, and then plus this side, eh? Liabilities?
Yeah. Minus on the debit side and plus on the credit side.
Minus on the debit side and plus on the credit side. Very good. This is the accounting equation that must always be on your head. Please. This one, you must always think about it when you're doing accounting, whether you're doing balance sheets, whether you're doing income statement, whatever that you're doing in accounting, you must always think about this. That's why I'm talking about this thing now, to say a debit balance, right? The balance is debit, is on a debit side. It's a debit balance from debtors ledger, must be transferred. So when you're transferring it, which means I'm taking it out from a debit side, I'm crediting it. That's why here you can see trade and other receivable is credited. And when I'm crediting trade and other receivable, this is an asset account. Trade and other receivable, this is an asset account, which means now it is decreasing because of what? Because what did I do? It is decreasing because I credited it. So this is an asset. It is on a credit side, as you can see there. It is on a credit side, so it decreased. Then now trade and other payables. This is a liability account. This is a liability account, and it's on a debit side. It means it is decreasing there. Okay. That is the transaction. Then they're saying here, we can move on now. The following financial indicators were calculated on 28 February 2022 after all adjustments were processed, all right? So we have a current ratio here, which is 1.6:1, and then we have a debt equity ratio, which is 0.4:1. So these are they're going to help us to balance our balance sheets, because they wouldn't just give us these ratios for no reason. Then say here, they're saying the loan. If you look at it, saying the loan from XY loans will be reduced by a capital portion of 228,000. in 2023, in the 2023 financial year. So this 228 becomes what? A current portion of loan, yeah? Yes, this will become what? A current portion of loan. It is going to be 228,000 rand. So I'm going to have what? Current portion of loan, 228,000 rands that I'm going to have here. You can see now that we have balanced everything. We have balanced everything. We have now dealt with all the transactions. There's nothing else that is left. All the transactions we have dealt with. So the only thing now we have to get the totals, put the amount where they're supposed to be, and then we balance the balance sheet using what? Using what we need to use. So using those two ratios, that's the only thing that we need to do. Otherwise, this is the only transaction that is left. So your starting point, what we need to do here, Kinelo, is that whatever that we need to add here, fixed deposits, we need to close the brackets and get the amount. All these trade and other receivables, we close the brackets when we get the amount. So I'll leave this task with you. Please work on it, and then on Monday we will discuss it. Then we move on to the next question. So once you get all the amounts where they're supposed to be, there's that are on the workings. Then if you want to send it to me tomorrow, you can send it to me. Then we can discuss it quickly. Then we close this thing off. By Monday, we know we start a clean question. So you can please just work on the remaining amounts, getting these amounts where you have to get a total, and then we're going to balance it using this. I'll leave this task with you. I'm going to close our session now, and then maybe tomorrow I may tell you that we're going to meet to finalize these few parts. It won't be long. Maybe it's going to be 30 minutes or 20, and then